Hey everyone, Anthony Venuti here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about mortgage fraud on the CBC Marketplace report and private mortgages and what you should be looking for. Stay tuned, you don't want to miss it. I want to take this opportunity to have an open and honest conversation about the recent CBC Marketplace report that uncovered fraud in the mortgage industry. And obviously it is a big problem. We will leave a link in the description box below in case you haven't checked out the video for yourself. Now, it should go without saying that as a mortgage professional, we hold ourselves to the highest degree, the highest standards possible, and we do not condone, promote, or facilitate fraud. Now, obviously there are many bad apples, many bad actors, as we can see from the actual video.
Hi, how are you?
Our team tells agents they have the down payment, but
My income is cash, right?
cash means our tester can't prove her income.
That's a problem.
And no way a bank would approve a mortgage to buy this house.
By books, you will not qualify.
The agents know this, and yet
They will do some documentation showing that you guys are making more, and they'll get you qualified.
they're offering fake salary and tax documents to get our couple a mortgage they should not qualify for. Another, speaking in Hindi, even shows off tax documents he's got for another client.
ये अपने टैक्स रिलेटेड सारे जो हैं
Okay.
इनको हम इनकम बना लेते हैं यार इनकम हमारे लिए इशू नहीं
But fakes like that will cost thousands.
That's what they charge 1% of.
But it is important to work within our bank's guidelines and our policies to provide our clients with the best financial solutions to help them obtain their dream of home ownership. And by doing so in the proper channels, it gives that client a fighting chance to survive any economic downturns. And by that I mean obviously the qualifications for income, purchasing a home at the right price, and understanding their finances. And although that is a major challenge right now, especially with home prices coming down and interest rates on the rise, as the inflationary data came out just on Wednesday, we are going to see the Bank of Canada further increase those rates, putting even more downwards pressure on people's mortgage servicing and debt servicing. So could you imagine those individuals that are not qualified, who are not actually validating their income, and they're just purchasing a home because they may have the down payment, but they don't actually have the income? What will happen to these individuals? This is the major problem. We might see some downwards pressure in the housing market by an uptick in listings once we start to see the problems surface. We hope that this doesn't happen, but obviously we have to look at where these people are getting their financing. And it's important to understand that these individuals that are complicit in fraud, whether the client themselves is aware that fraud is being committed on their behalf or they were completely oblivious, like the individuals that went to the bank and the bank individual falsified their documents, it is important to point out the unfair advantage it leaves actual legitimate buyers in, where it creates a bigger pool of buyers that should have never been in the market competing for properties that they had no business competing in.
What could have happened if these mortgages had gone ahead?
If housing prices fall, these are people are most likely to default on their mortgages, and that could put downward pressure on the housing market.
This fraud affects us all, creating a potentially unfair market by increasing the number of buyers, but also risking more defaults and panic sales.
Now that brings us to the point about private mortgages, where the video actually points to private mortgages and how lucrative they are and how profitable they could be for the individual.
There are also insidious brokers that want to push you into a private and say, hey, funding fell through, we got to go to a private. Don't worry though, I'm the hero, I got you the money, right? I've had people that are going to privates and they're paying $50,000, $60,000 in fees.
So there's actually more profit.
Oh yeah.
Sure enough, Chris and BB's agent steers them to a private mortgage from a surprising source.
On the day of the closing, friends of the real estate agent saying they'll lend you the money?
That's correct.
It's $1 million loan to bridge them until a new bank mortgage can be arranged.
At 7 o'clock in the evening, we are signing the contracts for the mortgage in the realtor's office.
The interest on that loan? $20,000.
Now, I want to point out that private mortgages are definitely a big tool in any broker's toolbox. but they are a tool that should be deployed with caution, and it is basically dependent on the client's situation. We don't just grab clients and put them into private mortgages, although that has been a trend that has upticked since 2017, and we've seen more and more market share go towards private lending because there's no qualifications or regulations. The industry does not regulate private mortgages at the current moment, although there are factors that are going to be requiring agents to continue education in levels in order to administer private mortgages, as well as hopefully additional requirements for the barrier to entry for mortgage professionals, which I am a big advocate for. Any mortgage broker that is giving advice to a client when it comes to their finances and purchasing a home should have a continued and more education than was previously offered. That is very, very important. Now, obviously, private mortgages are something that many agents will actually administer because it is very simple. So those of you that may not be aware, a private mortgage is not regulated and is not issued by a conventional bank. It is not even an alternative product in the B space, as those types of products still require qualification. Private lenders are very considerate of only a few things. How is the client going to pay? But not really a big concern. They don't really look at servicing ratios to some regard, and also the down payment. They are just basically concerned with the equity in the home and how fast that home, if a problem arises, can be sold. And when you look at these types of private mortgages, they are definitely higher rate products, higher fee products with interest only components. We do see a lot of private mortgages. We do see a lot of clients that have these products. And the reason behind them are maybe the fact that they needed a short-term bridge in order to get them into a bank. Maybe they had some credit issues. Maybe they needed to pay some taxes. There was many different components onto why a client may need a private mortgage. Assessing that need and applying it correctly is important. But like in the video, it points out that the client was denied their bank loan, and the fact that they needed to close on the 11th hour, the real estate office came to the rescue with this mortgage, this private mortgage, at an incredible interest of $20,000, and now the client is basically closing. But the end result is the client going to be able to get out of that mortgage? And if they can't get out of that mortgage, what is the cause and what is the problem? And the payments, obviously the servicing of that mortgage, are going to be much more challenging. Now, in the industry, obviously private mortgages are something that is a very big conversation, and the reason behind that is because of the fact that now that home prices have come down and interest rates have gone up, a lot of these people that are in the private mortgages, if they hit renewal, what rates are they going to see on their products? If you think that fixed and variable payments or rates right now are elevated, just imagine what you're looking at on the private side, where those rates can renew at anywhere from 10 to 20% with fees. And obviously that is very, very expensive. That will continuously have downward pressure on these families' finances, and the pressures are going to start to reveal themselves in the coming months. Now, what will happen, obviously, with the housing market is very, very challenging to predict. We don't have a crystal ball, and hopefully we won't see many signs of problems, especially because we don't want these families to be in the streets or on the streets facing these challenges, but obviously it is a big problem. So what we'll do is we'll leave the video here. If you like the content that we're producing here at In Touch Mortgage Solutions on our Finance Friday episodes, please feel free to hit that like, share, and subscribe button. And don't forget to leave all your comments in the comment section below. But we'll wish you a great Friday and even better weekend ahead. Thank you for clicking, and thanks for watching.